The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi, folks. Basil Chapman, Tiger Technicians Hour. This is the first day of May 1. And a couple of things we need to talk about. And the first thing is, right there in the news, 99-year-old. What are they doing? They're taking Wrigley Field, and they've got a $500 million renovation plan going on. Worst time since the Great Depression, right? And the 99-year-old field, Wrigley Field, is about, by the Ricketts family, is about to be refurbished, redone. And this is a very interesting thing, because when you look at certain periods in time, what you find is, regardless of economic structure, to enable edifices, large constructions, buildings, skyscrapers, whatever it is, houses, to continue for another generation meaning another 60-something years, it's absolutely imperative that these things come about. Whether or not it's for this very period that they think it is, sometimes it isn't. It's for another period. So it's just fascinating, because what it does, and certainly in Chicago, it could be very important, just financially, just in terms of making some kind of, how can I put it, a structural change that essentially goes to refurbishing, reconditioning, building up an area that was probably blighted or in disrepair. And that's really important. It's just really important to be able to say there are things going on that are going to be, maybe we don't know if culturally significant, but sociologically could be very significant. Looking out, not just 3 years, but looking out a long period of time. I'm talking 60 to another 99 years. So it's going to be very interesting. But it is the timing of all these events that I find is something that is beginning to become a worry for me. A worry in the sense that there is also the rationale that says everybody else is doing something, we need to be doing the same thing. And it sometimes bypasses the realization that maybe it's not the best time economically or whatever. So we're going to see. This is something that's playing out one by one. We're just checking off all these things. And at a certain point, we'll find that the cumulative effect is, in fact, something that we really have to take into consideration as an event of possible consequences. I mean, consequences looking out. So let's see what happens. And as far as I'm concerned, it's more an exercise in my how can I put this? It's an exercise in looking at the historic relationships of other periods which have been similar, while at the same time put into my Trends Watch analysis. So we're just going to be able to see this play out, and we'll see where it goes. Now, let me just do this. I want you to quickly do, there it is. I've got everything set up, and I'm ready to go. The Dow is down 53 at 40,786. That's 100 points off the top that it needs to break to be able to start a new leg up. We've got the S&P is down 5 at 1592. The comp index is down 12 at 3315, acting a little bit better, I guess. The gold is down 26 at 1446. You know, I've sort of avoided this gold. We were about to buy an ETF, and I just said, let's just step aside. Let's see where it finds support. A lot depends on the relationship, I think, between the commodities that I'm looking at the end of the day. I'll be able to do a better analysis of it. But the commodities and the dollar, the euro, etc. Euro made a new leg up, leg C. So this is going to be very interesting. We've got, I'm very worried about this. Copper is now under 3.1. It's at 3.09. Platinum's down 30 at 14.75. Crude oil is down almost 3 at 90.70. Bonds are up 30 seconds. So let me just try for a moment to put this into the perspective that I'm looking at. In the so many 120-minute charts have on the shorter term time frame gave peak E, D, E's, or even F's. Just looking at them in terms of indices, the E minis right now, peak D, and we've pulled back from the high of 1595.50, I think it was today, or last night, that is. Yeah, 1595.50 on the June E-minis, and we've made a low of 1582. I said 83 to 81, 1581. 81 should be supportive. It starts to take that out. That's not a good sign. But this is just part of a corrective process. So far, I can't put too much into this. But what I am going to look at here, let me just check my S&P 120-minute chart. I believe they made it. Yes. Now that has either recycled up to A, B, C, A, B, C, D. It could have recycled up. This could, in fact, be a G. I haven't had time to update it yet. But let me just see if I've got the Dow in here. I don't know if I've updated it. No, I haven't. Okay, I'll go to the Dow Diamonds because they have been updated. Here we are. So let me just show you exactly what I'm looking at here. First of all, in chart formations, the chart has a cup formation going towards the left side, right side, price time match in the Dow daily. This is what I show my subscribers on my opening call every day. And it's been walking the 9-period exponential moving average. 14,740 is the key support now. If it closes under that in the next 2 days, that's negative. But remember what I've been talking about. In fact, I discussed it. I didn't discuss it. There was no one on the other side. I mentioned it in my opening call this morning in my overview section that if, like a cork in water, the price keeps on coming to the top every time it's pushed down, that's the bull phase. That's really what you want to see in a bull phase. Every opportunity is an opportunity to buy. On the downside, it's like a pebble in water. When you drop it, it goes straight down to whatever the base is underneath it. Now, that is going to be very important to be monitoring because so far the uptrend appears to still be intact, but is becoming more and more selective because, as I mentioned, that my Dow Quartet, GE, IBM, Triple M, and UTX have had disappointments. Can they actually not rebound? Can they start brand new buy modes from here? I suspect they're going to need a little bit more time. You've got Merck that came down. I don't know what Merck's doing right now, but Merck is another. So one by one, the Dow type stocks, UNH got pulled back, are pulling back, but the market has held well. As an average or an index, it has held well. The volatility index in the 120-minute just popped to leg C, but it's not a very big move to the upside. And you've got in the 120-minute Dow chart, you've got a peak F/B in the ChapmanWave that says, what are you giving most credence to? What's the most important? Right now, I'm calling it F/B, but I'm really close to calling it B/F, expecting a peak C. And peak C, now this is fascinating. Why? Because peak C will start at 14,844.96, and today's high is 14,839.80, so we've hit that 80 level. We haven't been able to get much higher than that. What's important is that the S&P broke above the 1597 high. That was the previous peak F high back in March, was it? April the 11th. Sorry, April the 11th. And that says it's broken out. I'm calling this leg B, not leg G, but leg B. In other words, I'm anticipating that we're going higher this week and next week, even if we pull back here. That's just the way I'm looking at it at this particular point. Now, it's really, I think, something that I have to take into consideration. So let me just show you, if you're looking at Tiger TV, this box that has these 5 quadrants, I love to call them quadrants, the 5 quadrants, has the 120-minute Dow chart. Now, look what's happened. You had the leg, you had the body, you had the neck, and now you're making kind of a head formation. But that can recycle. We've seen it recycle to the upside. And why? Because the left side high in this cup formation says 14,887. It's really an upside target. Watching it closely. I'm wrong if the Dow breaks under 14,650 in the next day or two. I'm wrong in expecting the 120-minute chart to be not peak F but peak B. Now, the volatility index, only when it breaks above the previous high candle of 14.87 made on the 23rd, will I say, in the high 14s, low 15s, now you can expect 1487, yeah, breaking into the 15s. In the 15s, I believe we will start to see selling that could start to accelerate a little bit, but it's really up in the 17s that you're going to see a very strong bunch of selling in the overall market based on my reading of the VIX index. Now, what's important about the let me just go back to the different charts that I'm looking at. If you look at the NQ, I believe I've finished this one. The NQM made a peak D in the 120-minute chart. That is the NASDAQ 100, and it made it at 2884.25 yesterday. So now what we're doing is we're having a high-level consolidation. I'll put in the rectangle formation. This so far is what I have to watch. And if this breaks down, if it goes underneath 2860, then, of course, you can't test the low of just a couple of days ago. Yesterday, of 2853.25. So we're going to be watching that closely. So far, I'm calling this a consolidation. I'm calling this brand new leg C up in the NASDAQ 100 daily chart and leg C up in the weekly. That's very interesting. So now let's go to the nitty-gritties of what I really want to look at. There are a bunch of things that I believe are going to be quite important. I often look at, we hardly ever have it as a stock to buy or sell. I talk about it though, market-wise. But BRK, Berkshire Hathaway, someone sent me an email last night saying Berkshire Hathaway made a round number close. Well, that's the A shares. I believe that almost everyone trades the B shares. The people who got in early on the A shares, that's fine. But the B shares, they were up at the 170,000. I don't know what they were at one point. And then he made us, the B shares became a 5th or a 10th, I can't remember. But they were changed because Buffett wanted to have it more amenable to regular folks being able to buy it. So the price was just same issue, just the price was a 5-for-1 or a 10-for-1 split. Down, not up. So now let's just look at this. If you are looking at Berkshire Hathaway, it's making, this has been a fantastic stock. And I constantly talk about Buffett as, I'm not talking about him as a politician, which he is. I'm talking about him as one of the few people in the country that doesn't buy stocks and build an empire on stocks. He buys companies and he's built an empire on companies. There is such a big difference between the two. One is paper transactions, one is a functional business, and hundreds of them. I'll be back. Basil Chapman, 877-927-6648. Love to take your calls. Dow's down 49.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pizzamento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, Basil Chapman, Tiger Technicians Hour, and the Dow is coming back a little bit. It's down 47, and the S&P is down 480. Remember, in a bear phase, every single bit of news, the weakness in IBM, the weakness in GE, the weakness in UTX, Triple M, it would have just smacked the market down, down, down. So I have to believe that there is still internal strength. And it's the reason why I've gone back to wanting a split a portfolio for subscribers, starting the shorts here, if we can get them, adding just very selectively on the long side, tight stops. Just really important to see exactly how this is going to play out over the coming few days. But I still believe we've got upside potential, and that's what we're going to be playing. Let's go to Mike in Long Island. Hi, Mike. How are you?
Good. How you doing? I was the fellow that sent you that email.
Right, and that was the email. That was the A shares, and let me just put in BRK.A. And there's a little, I haven't actually, I used to notate this, but I don't bother anymore. It closed at 170, what was it yesterday? 159.000. So it's 159,000. And it made all-time highs just past week. And that is quite incredible. But at the same time, I like the actual stock that I watch is the B shares. So what's going to be interesting, I've got this as a peak A, but actually I'm almost about to say E slash A. Why? Because the MACD is still very good, and the stochastic in the monthly chart is at 97%. MACD is still good. I have to tell you, I'm looking at some of these stocks in awe and saying the weekly charts, many of the weekly charts, even the monthlies, haven't gone parabolic in the classic sense. I mean, parabolic is something like something we've discussed before, BIB, Biogen IDEC, which is, there again, it's a fantastic company, and they got this multiple sclerosis drug. I mean, everything about it is very favorable, but that weekly and monthly chart is just, that is vertical. So I'm watching it closely, because as long as the technicals of the monthlies are able to support the price as it is pulling back, and you don't get a failure of the stochastic, it says rectangle high-level consolidation with new highs to come. So I'm watching closely, but on a daily basis, some of these are really vulnerable. You wanted to talk about?
Whole Foods. But yeah, I think that's interesting on the biotechs. It's a good industry to watch to gauge the market, because that's been the most frothiest sector. So we'll see how that comes.
Yeah, it's very interesting, and I'm seeing every day, I'm looking at the low-priced ones starting to come alive, and I'm looking at them and I'm saying, wow, some of those chart patterns, you wouldn't know that they are $3, $4 stocks, because they are very mature, full-fledged patterns. It's not like there's 300 shares being traded. There's a lot of volume. And they're participating very well. So when you start to see the very low-priced stocks in a particular sector come alive and really act well, then it says, okay, now we're going down from the multi-$100 stocks down to the single-digit stocks as people try to play catch-up in the favorite sector. And that says you're getting towards the tail end of a move, and that's what I'm really looking at. But I don't know.
I wanted to ask you about Whole Foods, because I think I got a little overexcited. I jumped the gun. Yeah, I'm worried that this is going to earnings are coming out May 7th, and I'm worried that this is going to fill the gap there. It looks like it wants to get to the major moving averages, and then could this fill that huge gap?
Yeah, let's talk about it, because this is one that was on my list as a short. I didn't actually get to adding going back to short it for a couple of reasons, and one of them is, I'm just looking here. We had a small short position back on the 8th of January at 89.31. Where is it trading right now? 89.49. Where has it been since then? It's been up to 96.93 with a double top, down to 81.39, and now it's not in the middle, but it is at 89.50. I think you and I need to look at this much closer. I think you're right here. Something's going on that says it held very well on that last pullback, and now it is trying to rally towards the gap. I'll be back with you, Mike, straight after this. We're looking at Whole Foods WFM straight after this very important commercial.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, everyone. We're back. We're back with Mike in Long Island, New York. And, yeah, I'm going to talk about Whole Foods in a second. Just before I forget, I need to write down. I had a quick email from one of our TFNNers who said REGN. Well, of course, look at the stock, Regeneron Pharmaceuticals. If ever that was moving vertically, that's just an extraordinary example of what I've been talking about. Would have been nice just 3 days ago to be in it at 200 and see it at 250, but that's the speed, and that kind of speed is not really sustainable. So let's go back now. We'll talk about Whole Foods, and then I'll come back if I have a chance later on to look at Regeneron. Whole Foods is about to make a leg in the daily chart. Let me just do this. There's a gap between 95.91. The high, the all-time high is around number 97. No, it went to 99.86. I remember that. 98.50. Oops, 98.50. Let me just double check. I don't know what I'm doing here. 99.86. There it is. 99.86. That was a peak F-top, and I've got a big question mark on it, as if to say, is this really going to be a hat-trick top with the monthly, weekly, and daily all in sell mode? Well, it has pulled back really sharply from that 90, almost 100 area down to the 81.39, so that's 20, so that's almost 20% decline. Now it's rebounding, and the levels to watch is 89.88. That was the high of the gap down day on the 14th of February, because the previous day the low was 95.51. 95.51. I can tell. It was really such a busy morning that my mind is getting a little trouble focusing here. 95.51 was the low bar of the 13th of February, and then it gaps down. So you've got yourself a 6-point gap. Now, I suspect that if this is leg C, the previous peak C failed, and it went to C minus, came back from 83.07, went down to 81.39, and very quickly has bounced back. This is a pattern that I always have to respect. It's a slight variation on it, but it is the characteristic of the pattern is the same. And that turns out that it could be a cup formation that is forming right now, which tells me that you have reason to be a little concerned, because if it takes out 89.77 today, and it's already at 89.74, it's just 4 cents up. Now, you never know in markets like this, it might fail to get there, but if it does, that's leg C. The MACD is strong, the moving average convergence divergence, and the slow stochastics at 79%, still quite good. It's got a rising on balance volume, and the relative strength is also rising. Neither of them are great, but they're rising. So this is what I'm going to recommend to you, that either we're going to see Whole Foods come out with some statement, something happens where it just suddenly gaps down 3-4 points, because that's what it's going to need right now, or it needs to fulfill some kind of an upside obligation, and that could take it. It could even, that's a little high, but 92.47 is the V-shaped bottom on the 7th of February, the 6th of February. That area would be kind of, let me look at my 120-minute chart. Yeah, potential little double top here, but if it breaks out, that's going to be important. Okay, this is the way I would look at it. I would say to you, make on some part of your position, you're shorted. So I would have some part of my position, I'd have a fairly tight stop. In fact, I'd make the stop as tight as 89.88 was the high of the 14th, that gap down day. I'd make it 90.02, something like that, just in case the price just goes above and then pulls back. And the reason why I would get out at that point is that the chart pattern I'm looking at, because it's broken above the high, the arch high of 88.77 of the 14th of March, says that the upside has to try to go to the previous important peak. Well, there isn't an important peak unless you're going all the way back to the high of 96, in the 96.90 area. So that's crazy to be sitting there like that. So here's my recommendation. Have some part of that position have a stop, because even on a day like today where the market is down, S&P's down 6, Dow's down 60, Whole Foods is acting quite well. That's what you're concerned about. So I would not mess around. My eye still says this thing is going to be going down, and I have a target below 80, somewhere in the 79 to 77 area, looking out maybe 4 to 6 weeks. But I don't like to play games. You can always get back into the trade. You don't want to be a hero and say, hey, while you're waiting for, it's like the folks who've been waiting for a 10% correction have seen a 20% rise in the market. You don't want, you don't want to be in the wrong side of the trade. So I'm just saying to you, if you put a stop on part of your position, just a little bit above here, 50 cents maybe, then I would say that I'd be comfortable with that. Why? Because it could land up being leg C, still wanted to go to a D. And then we'll be looking to see if it arches over, because the month has just begun, and April ended up with the monthly chart stopping, the price stopped right underneath or on the 9-period exponential moving average. So it didn't have the strength to close above, so I'm going to be watching that. But that's my reasoning. The weekly chart still says somewhere in the 89, no, somewhere in the 90 to 92-ish area, 91.90 area, there should be a reversal to the downside. Because if the MACD then turns positive I would not want to be wrong on this thing because it can move very quickly to the upside. I don't have to tell you. So I hope that helps you.
Yeah, no, thanks. Thank you very much. I appreciate it.
Okay. Good. Thanks for calling. Now, I just want to see a little mention that Dan and Tom said Euro is pulling back. Euro made a new recovery high, I believe. Yes, it went to leg C in the daily chart, and that's the left side, right side price time. Actually, it took a little longer. MACD is still good. Stochastic's only at 57%. Okay, we're going to have to watch this really closely because the dollar, DXY, the dollar, I think the dollar, that 200 period moving average seems to me to be a target for the dollar. That would be 81.10. It's at 81.58 right now. All right, we're going to be watching this. We don't have any position in this, but I like to treat it as important information that we need to look at. So now, I had written down here IYW. I got a question yesterday. I never had a chance to get to it. I think it was IYW. Was it IYW? No, IYW is something that I wrote in there. Someone asked me yesterday, let me find it, XLY. The XLY, I believe that's what it was. Didn't have a chance to get to it. XLY, here we go. Oh, the XLY is the S&P Select Consumer Discretionary, but I like to go to the IYC, which is Dow Jones U.S. Consumer Cyclical Sector Trust, which has it has a very similar chart pattern. Look how it's been stalling right here at the 100 level, par they call it. Right there, the high was IYC is at 100 right now at par, up 0.07. The last high of 100.24 on the 14th, on the 12th of April, saw a pullback down to the 97 area. What was that? 96, 91. It ran back up to 100.22. 100.22 is in fact 2 cents less than the previous high, and then it ran back today again to 100.16. Now, what I'm finding very interesting about this is that in my when I look at Fibonacci expansions, it is. Let me just make this in color here. Make it a color. Make it a whatever it is. There you are. Make it a little darker. Make it darker. There you are. Okay. When I look at these expansions, this is expanded almost of the 238% expansion. This is starting to become quite toppy. But the monthly, and this is going to be the big thing for me, the monthly still is in leg C. Well, of course, today, 100.24 and the high is 116 today, says that if it doesn't break 100.24 in the entire month of May, it's made a top. But this chart says it's still very positive. Now, isn't that interesting? You've got the iShares, Dow Jones U.S. Consumer Cyclical Sector Trust, within cents of its all-time high. The weekly chart has gone to a peak E, and for 3 weeks, 1, 2, 3. This is the third week that is trying to break to a new recovery high. And in the daily chart, you've got this V-shaped formation that can turn down. So I'm going to be watching this closely because this is the pattern that I'd be watching for some kind of a top that could become a fairly serious top. That dreaded H formation, let's call it the H formation. If in fact the IYC starts to take out, just anywhere in the gap, somewhere in the 96.70s, so that's 2.5 points lower, that says be careful. It could be making a failure pattern. It's going to go all the way down to test the 96.91 low of the 18th of April. That makes a breakout into the 101 area very important because it would recycle the daily. So a lot of these stocks are looking like they're very overbought, but internally they're still showing strength. So this to me is going to be a pretty critical phase coming, what can we say, today's Wednesday, going into Monday afternoon and Tuesday morning. I think very, very critical. Now let's just look at something else that I consider to be in the weekly chart critical enough to keep mentioning. the volatility index in the weekly keeps making these spikes to the upside like it did in the week of the 1st of March, then again in the week of the 15th, the 19th of April, and then it comes back down. It's as if the magnet of the 9-period exponential moving average at about 13.64, it's as if that magnet just keeps dragging the price down. So that's why I keep saying, if we start to see the volatility index, the VIX index, VIX, dollar VIX.X is the way I get it, start to push much higher, that will be the key to say, okay, now we're starting to get that May effect of weakness. But up until then, I'm just saying, let's see if we can consistently try to trade on the long side with tight stops, have it successful, out if wrong very quickly, small loss. And on the short side, this is the period where you want to be looking at shorts. I don't see any reason why you shouldn't be looking at shorts, because this is the period that says the selectivity of the move up is starting to rotate and take pressure off. Let me see what Kellogg's are doing. Kellogg is K, symbol K, pull back. Now, I don't know if this is going to be called an EFG peak G/C. I just don't know yet. So I'll put it in. In the daily, whether it really is a peak F, that makes it a peak G in the daily. But if this is a doji high with a peak F top in the monthly, having gone just over my favorite expansion, is when using my technique, there's an expansion in the Fibonacci, what they call the Fibonacci. What's the full title of this? It's called the Fibonacci price extension lines. And it goes over 261.8. At that point, I'm watching it very closely. Why? Because it's a doji high at a peak, possible peak F, could have recycled. I'm calling it peak F for now, without any hesitation at the potential for an instant restart at the D. And the fast-moving average of the MACD is still very strong, but it's turning down now. It's exactly what you expect in this kind of a move. And the stochastic and on-balance volume are turning down. So Kellogg says and it's a potential single leg A up in the single leg E in the in the monthly chart. But there the technicals are still very strong. That's the reason why I can't talk about the major tide yet, because the major tide in the monthly chart is still up. But I'm watching this real closely, because if there is a pullback and Kellogg, which is trading at 65.20, up 16 cents, closes underneath 63.30, let's call it 63. That's not a big deal. It's just 63 is just 2.25 points away. If it closes under that, done. And now let's look at GIS, because all of these in that food sector. Now, GIS might have recycled. This could in fact be leg G to the upside. Leg C in the monthly chart. Wow, that makes it still very strong. But you got a peak F, 50.90 on the 23rd of April, and that if there is a price above ABC, yeah, if it goes above 50.90, I'll be watching this closely. Has it recycled, or is this now instant restart that goes ABC? Now you're getting to a D. Yeah, there's a lot of things going on at the highs, so we got to watch that. Now I want you to just do this. I want you to go through the IWM. IWM made a peak B in the daily with a sharp move to the downside, and it's underneath the previous high. But that weekly chart says it's still got an outstanding peak to come, peak D. And the monthly chart is in leg C. It's actually made a peak C, because last month there wasn't a new high. Hey, I think it's worth doing the IWM. I'll do that when we get back. Oh, we've got a call of a...
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi folks, Basil Chapman, Tiger Technicians Hour. We're going to go straight to Bob in Greeley, Colorado. Is that correct, Greeley, Colorado?
Yeah, 52 miles north, Basil, ex-tennis player.
Oh, ex-tennis player.
Can't play anymore. I'm handicapped now, but I've been a trader, and I got into tennis when I was about like 21, and man, I got hooked on it where I had to play it every day.
Yeah, I'm playing actually outdoors today. I'm really looking forward to it. The season started outdoors, so that's good.
Oh yeah, we had it outdoors last week. Got a question on the EUO.
Yes.
Where would you step in on that position? I mean, I'm holding 5 shares, and I took my profit off at resistance way back about 10
back
days
at the
ago.
doji high on the 27th of March, right?
I sold out about $20. Just kept 5 shares on as it goes down. And,
so let me just give a little information on this. Let me just finish the chart. A, B, C, D. Is that an E? I think it is. I'm going to just check it out. This is 97, 97, so there's parallel, that's an E. So beautiful. I love, when you put this together with the Chapman wave, it gives you a peak D doji, a peak D at the high of, well, there was what I call an instant restart. So there were two full buy modes that took you to a second one, and very often, that's what the beauty of this technique that I teach about the instant restart is that when you recognize it, it isn't just bullish. It can take you not just only to another full buy mode to peak D, it often goes to an E and an F. That's the beauty. And this went to that doji gap, island reversal, gap up high of the 20, what did I say it was of April? I said the 27th of March, I'm sorry, at 22.22. And now it's come down, trough A, B, C, D, E, bounces, makes that H pattern, fails on the left side. This is the bar that you have to be a little careful of. Why? Because this is the bar that can also go back just to revisit the arch formation, which would make it at 18. Folks, we're looking at the EUO, which is the ProShares Ultra Short Euro. Everything I was looking at in the Euro, this is the opposite. Now look at this. What we're looking at here is the potential, and I'll draw it in right now. Let's see how much time we have time. I'm just do this real quickly. So your question is, when would be an appropriate time to either add to your position, or what do I think would happen with the EUO? And my answer to you is, I still so far like the action of the euro, but the major test is coming right here, and we're underneath the low of 19.08, and right now we've gone to. This is my recommendation. I would not do anything with the EUO until I see the EU. You do look at the currency pair together, right?
Yeah, I always do. I have commodities up at the same time.
Okay, which actually was a reminder, this is actually leg D in the euro. Now, what's really important, if the euro starts to take out today's low of 1.31597, then I would add just a little bit to the pro short of the EUO. But at this particular point, based on the action of the dollar, I think there's going to be a high-level consolidation, and I'm suspecting that there'll be a little bit of a test, a little further test. But now let me also do this real quickly before we run out of time. You see, everything about the charts is that there's a good chance that the dollar it's at 81.59 on the index, that it's going to try to test 81.20 to 81. 81.10 is the 200-period moving average. If you can see that hit and then the dollar bounces, that's when I would consider the EUR would add to that position. So those are my parameters. I hope that helps you.
Yeah. Would you take a position at 1846? So I'm waiting for the euro to go up to a 1.33. Do you think it'll make it?
Between 1852 and 1846, I would start a very small position, yes. Hope that helps you.
Okay.
Thank you for calling.